Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, July 7th. Firstly to the S&P 500, and here we see the trend continuing to the upside, this current candle forming a higher high and a higher low, but forming that higher high, higher low on an indecisive spinning top type candle. It does suggest that there are doubts as to whether the market will be able to continue to higher levels. Importantly, once again, we found the market stalling around this 2100 level, and the last time we were here, which was about 4 trading periods ago, we formed an indecisive candle and then the market sold off in a minor manner, but we still did fail to see strong follow-through. The time prior to that, the buyers had closed with control above the 2100 level, but then we saw that strong selling coming off the back of the Brexit vote. Prior to that as well, no strong follow-through after the breakout through the 2100 level, but we did trade through to 2119 resistance. Now, this indecision entering the market and the buyers losing control and commitment that they had for the previous day's trading does suggest that there is potential for a change of trend. But remembering this is an indecisive candle, it doesn't say anything about the strength of the sellers. So we aren't seeing any strength from the sellers at the moment. And the sellers will need to trade through 2093 that has held as support. So what we have is an indecision. So we play the market by ear. We watch how the market reacts to these levels. And obviously the low of today becomes important. It's at 2089, and we'll be looking for a lower high and lower low off the back of this indecision, or for the market to continue to higher levels. But the implications certainly are here for a lower high and lower low because of the loss of commitment by the buyers and the loss of control and loss of net momentum. Now, in terms of Ichimoku, still a bull market in all 3 timeframes, but if we look here once again at the Chikas band, it is within the corresponding price action, so it's still not giving us a solid bullish indication, not backing what we're seeing in all 3 timeframes in terms of trend. So it's suggesting that there isn't any momentum in that medium-term timeframe that's pushing the market to higher levels and not supporting these trend indications. If we do see the market come off, looking to strong support to come in at the top of this highlighted zone, 2079, and then down through to the bottom of the cloud, 2066. But the cloud is very thin over the next few days and probably into the start of next week. And then midway through next week, it probably becomes a little bit thicker, but not very thick. We have very thin cloud for quite some period of time. So this suggests that there perhaps will be an opportunity here for the market to transition into a strong downtrending phase over the next month or so if we do see any strong selling in this market. Next, looking to the bands for the S&P, and here we see the upper band holding as resistance, 2106. It was an area that we had to watch very, very carefully, and the rejection from here does raise doubt about the ability of the market to trade to higher levels. If we do see a change of trend, once again, we will be looking for support to come in at or just under the middle of the bands at 2079 at the moment. 2079 corresponds with the top of that highlighted yellow zone on the Ichimoku chart. So solid resistance overhead, solid support below. I think we just need to be fairly cautious at the moment.